Hey, hello and good morning everybody. Hi, my name is Darius Anucauskas. I'm the Chief Market Analyst here at Markets.com, and today is Monday, ladies and gentlemen. It's a new week, a new start, in a new tariff roller coaster ride. So look, I mean, the markets are crazy. I think as always, one-man show. It's a one-man show, yes, of course. At the moment, that's what we're going to be living through. So we have to be prepared. So, hey, stick around. We'll talk about all that in a bit. So don't tune out. By the way, this is a quick video preview if you haven't realized yet. But look, we're going to start the real live show in a few moments. So stick around. Hopefully you'll enjoy the session. I'll see you in a bit. All right, ladies and gentlemen, hello and good morning. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Monday, ladies and gentlemen. Monday, the 26th of May, 2025. So yes, welcome everybody. Welcome to this last trading week of May. Look, it's going to be a relatively quiet one today because, again, the U.S. markets are not open. But yeah, we are seeing a few developments here and there, but I'll talk about all those in a bit. First of all, again, apologies for not having the session on Friday because basically I had some issues with my accounts, with my logins and, like in computer and all that stuff. So basically everything was all over the place. Now, hopefully this is now all sorted. We're back running again. And yes, look, let's have a look at our risk disclaimer. Yep, I think that's going to be the first step for this show. Look, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest, and of course I'm not going to interrupt you in that field, but again, like I said, yes, we are having a very interesting period right now. I mean, we ended up on Friday with one piece of information, then on Monday we're waking up to another piece of information. Look, it's all over the place. A quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, let me just a few moments here and just do a few adjustments. Yes, tidy it up a little bit. There we go. So, yeah, okay. So, right, ladies and gentlemen, let's jump in. First of all, Nikkei225, and that is a beautiful chart here. We're seeing, yes, the Nikkei market is open today. It's only the US that's not open. Let me just also actually throw in the calendar, and let me just jump into our profile. And calendar. Let's open up the calendar. So, like I said, today the market, the US, they're celebrating Memorial Day. UK is also celebrating Spring Bank Holiday. So yeah, those two markets are going to be closed. However, the other ones are operating very well in full swing. Look, this little reaction here to the upside is basically from the moment that we heard that Trump is willing not to go ahead with the tariffs, and basically, yeah, I mean, they're going to delay the tariffs for a little bit, but again, the risk still remains there that he's delaying the 50% tariff on EU until July. Let me just double check very quickly, until July 9th, as I understand. Okay, look, I mean, everything will change still. Everything does change on a daily basis, so I mean there's nothing new here. However, I think that the goal here there is always, you know, somewhere to meet in half, right? So maybe the 20%, 25% is the ultimate goal there. But again, let's not over speculate too much, because we can try to predict as much as we want, but you know, it's still it's a one-man show, so we cannot really go any further than trying to go on a daily basis, like to all the information that we get on a daily basis. So now then, so yes, Nikkei225, looking at the technical picture here, kind of worked out beautifully, I would say. A little bit of a touch. I was hoping to see a better touch here of this 23.6. And yep, on the Fibonacci retracement, and this, by the way, Fibonacci retracement is drawn from the lowest point of April to the highest point of May. Look, we still have a week to go, but again, I don't know if this is going to be the highest point of May. Okay, then that's going to be quite interesting to see what's going to happen next. Are we going to hit, you know, where's my magnet? Are we going to hit something like this area, this 38,000 kind of 500, and go higher, or actually are we going to stay somewhere around here? Look, for now I would say just be careful. We're forming something of a possible inverted head and shoulders pattern. I talked about this already, and I mentioned that like for 2 weeks I have been talking about this. I said, like, look, if we're going to stall somewhere around this area, this whole area right here, then keep your eyes on the possible retracement back down. And maybe we'll get a hold up somewhere near the 50-day EMA. Okay, just a little bit above that, we got held. So, yep, this is what I'm keeping an eye on. So, look, for now, I would say it this way. As long as we stay above the 50-day EMA here, I'm going to continue targeting the upside, and I'm going to consider this as a possible inverted head and shoulders pattern. Now, of course, somebody might say, but hey, what about, let's say, you know, jumping in straight away? Look, this is always a little bit too tricky, too difficult, and that's why you always need to wait for that breakout to happen. So the neckline is kind of somewhere around here if I'm not mistaken, because it's going to be a little bit on a tilt. Yep, something, well, actually, this is where, you know, you're trying to find some sort of logic here, but yeah, I mean, maybe this could be that case. This is where we could, you know, see the beautiful breakout here of this neckline. Either way, I still need to see a push above the current highest point of May, and I have to say that it's current because look, we're still in the month. You know, we still have a crazy week ahead of us, because we have some data, especially on Friday. So I'll get to that in a bit. But yeah, keep your eyes on this. Again, if we suddenly see this one falling off the cliff here and falling below the 23.6, falling below the 50-day EMA here shown as the green line, then yes, I will consider a bit of a larger correction to the downside. In terms of economic data from Japan, well, today we didn't have much. Tomorrow, we don't really have much as well. Wednesday is somewhat quiet on the Japanese front. Consumer confidence is coming out on Thursday, and then Friday we get a bit of a data dump here from Japan, and yeah, we're seeing a nice drift lower here, but again, we're keeping an eye on this, and Tokyo Core CPI here is something to watch out for, of course. At the moment, everything is expected to go up here. Unemployment rate is expected to remain the same. However, of course, we'll keep an eye on it. Industrial production, year-on-year preliminary number. We don't have a forecast, but the month-on-month is expected to decline. Retail sales year-on-year expected to remain around the same. So in a way, the data is kind of like this, you know, like 50-50 in a way, because either it's staying the same or it's to the worst side. So yeah, for now I would say keep your eyes on this, because I think that for the upside, if the data will come out as expected, then the only driving force for Japan's Nikkei driving force to the upside could be the fact that just the general global market sentiment has improved because of the kind of the pause on tariffs. So let's have a look at China very quickly. China drifting nicely to the downside. This one is not feeling the love. And you know what? we're falling back below this this downside line right here. So meaning that there could be a situation here where basically we could end up testing the 50-day EMA. In my opinion, I think in general at the moment, yes, I'm going to stick to the downside, but again, only up until here somewhere, up until this 50-day EMA. I do like the idea of traveling all the way to the 200-day EMA because well, I do have this this little support area right here, 13,058 zone-ish. Good potential target, so let's keep an eye on that one. In terms of the upside, well, push up of the 13,800 zone is what I need here. If we can get a nice clearance of that area, then great, more buyers could join in. So look, in terms of the upside, what I want to show you is as well, like, yes, we're falling below this downside line, but because I don't want to overcomplicate the chart a little bit, okay, I'll do it right now, but I'll just gonna remove later. So basically, maybe we are forming something of a falling channel here. But again, that's way too early to say because this candle here, as you can see, is still forming, and maybe we'll end up finishing it like above, or if we do end up finishing above this line, then yes, it's a falling channel. But if we struggle, then maybe ignore the falling channel part, just kind of focus on some areas. And at the moment I'm focusing on this 50-day EMA right here, just to see where, if we can end up testing that zone. Australia 200, ASX 200. So yes, kind of a stalling moment, kind of like, just a little bit on a pause here. Look, I talked about this and I said that in a way we had a good run here. Look at this spectacular move. I mean, it's fantastic. I mean, this is just like one of those crazy moments after this reversal right here in the beginning of April. Look at this, 17%, right? Fantastic gain. Of course, on everybody's mind is the all-time high, the 8,600 zone. If we can go there, then that's wonderful, because then we can maybe create a new all-time high. Let's see about that. But the thing is that for now, given that we had such a strong move to the upside already, maybe a little bit of a retracement could be nice. However, I'm not excluding the upside. Don't get me wrong. I'm not saying that I'm going to be bearish here or something. No, for me, I'm going to go slowly. Whenever I see some crazy moves to the upside like these, then I just go for the current high. Let's say the highest point of last week. If we can clear that, the 8,425, then great. I'll consider a move higher. But if we struggle, then of course there is a chance for a drift to the downside. But for the downside, I would prefer to wait for a drop below the Monday's low here, Monday's low right there. And if we do fall below that area, great, I would say I'm leaning a little bit more towards the downside. And that Monday's low, and I'm talking about last week's Monday's low, 8,283. So yeah, keeping an eye on down. In terms of Australia and China, by the way, from economic data perspective, okay, so not much is happening. Industrial profits tomorrow from China. Wednesday, Australia construction monthly CPI indicator. Now that's going to be interesting. So basically at the moment the forecast is for a drop, and if we do get a drop, then I'm considering this one to actually push a little bit higher, especially if the global sentiment kind of improves and we see some action to the upside. Then yes, this is where it could go further north. New Zealand is going to be interesting because on Wednesday we have the interest rate decision, so keep that in mind. So yeah, going on Thursday, nothing major here from Australia on Thursday, and on Friday. Again, it's a little bit on the quiet side, apart from we're going to get some retail sales and housing numbers here from Australia. So okay, let's see how that's going to play out. At the moment, there are not many forecasts here, but check out the other economic calendars as well. Let's have a look at Dow Jones Industrial Average, ladies and gentlemen. Okay, look, given that this morning we saw headlines, or actually the headlines started coming through on Sunday, and we saw headlines that the tariffs are going to get postponed. The U.S. tariffs on EU are going to get postponed until the 9th of July. Then yeah, what can I say? I mean, it is a roller coaster ride, honestly. On Friday, we get like, threats. On Monday, everything is cool. And the thing is that, okay, great, but the market, again, like I said, it's acting positively on the news that we get, and that's wonderful. That's great. However, the market does understand right now that they're living through a different reality, because you cannot really, let's say, forecast, like, I don't know, like a month in advance or something. No, like, that's crazy. You can, like, sometimes forecast, a week ahead. So that's why we go day by day, and we'll continue doing so. But what can I say? It is an interesting period that we're living through. For now, from the technical perspective on the Dow Jones Industrial Average, what can I see? What can I say here? Again, a similar story as with the Nikkei. Maybe we're having ourselves a nice little inverted head and shoulders pattern, which this one is a little bit of a more complex one, because we have the two heads here, and left shoulder, two heads, maybe one shoulder here. And now the question is, can we break the neckline? So if you're really looking for something a little bit more reassuring, then keep your eyes on that 42,000 kind of 900 zone, somewhere around here. A nice good clearance of that one could attract a few more buyers into the game. For the downside, I'm going to take a bearish approach if we start falling somewhere below this territory right there. Below this 40,660 zone ish. Again, it's never like exact level. It's kind of more of something like this area, this 40,000 kind of 800, 600. So yeah, that kind of zone. So keep your eyes on that one. If we can drop below this, wonderful. I'll go to the downside. Very quickly on other indices, and I'll go through economic data from the US. So again, the same story here. The S&P. By the way, I'm not looking at the cash index. I'm looking at the actual index, basically, like how it opens and closes. At this point, maybe I'll change later again, but just trying something new here, actually not really new, but anyway, the S&P 500 here held nicely near this 5,800 zone. Yes, we overshot it on Friday, but the moment we know that the cash index is pushing back up, and this in a way is working out like a charm. This is what I was talking about. Last week. I said keep your eyes on this, and like I said, in the last kind of resort could be that those EMAs. Those are the one. Those could be the the ground point here from which the index could rebound. But okay, it's fine. The 5,800 was enough, so we're seeing this curve right now back to the upside. That's wonderful. And the question is now, what's going to happen next? Are we going to go back to the highest point of May, or actually are we going to stay somewhere there, and just this is basically the highest point of May, and that's it? We kind of wait until further notice. But let's not forget that we have some data. Like I said, I'll jump into that data in a bit. NASDAQ 100, let's have a look at this one. NASDAQ is, let me just drop a little my chair a little bit. Okay, so just a second. Oh, there we go. So NASDAQ 100, beautiful rebound, fantastic, amazing. But let's not forget that we're still in the earnings season, ladies and gentlemen. So some tech companies are reporting, and if I'm not mistaken, this fella is reporting on Wednesday. So NVIDIA, everybody's watching this one. Look, I mean, if you're looking from the technical perspective on NVIDIA here, what you can see here is that we're trading in a way above upside line here. We're still there is still positivity at the moment. We're seeing a little bit of a retracement, but that's fine. It's kind of a part of a nice little correction before another possible leg of buying. Well, that's at least how the theory goes. But let's not forget, let's not rush into things. We're watching, like I said, NVIDIA. And look, last time this company did go nicely to the upside here. We had a little push higher, but then we sold off. Then it drifted to the downside. But then there was like the whole political thing with it. Yeah, look, I mean, at the moment, oh, by the way, they're paying dividends. Yeah, well, it's a pointless dividend. But anyway, but at least something. Anyway, so look, in general, looking at this from the purely from the technical perspective, I'm saying that there is a chance for maybe a larger correction back down, maybe a test of these EMAs, because look how well they're approaching the upside line. We're near this downside line as well. So yeah, it's an interesting moment. It's a very technical setup right now. However, I think I'm gonna abandon all that if we just straight away start pushing above the 137.40 zone. That's the current highest point of May. If we clear that, the forthcoming higher high will be confirmed, potentially attracting more buyers into the game. And that's where we could start aiming for, you know, some 152s here, or maybe even higher. But then if it's higher, then it's all-time high. Oh, no, sorry, the all-time high is around here. There we go, 153.13. There we go. That's after the stock split. That's the high. That was the highest number. But yeah, look, for now, everything's looking quite interesting. I strongly recommend everybody not to try to do anything beforehand. Again, if you think that you're just going to buy NVIDIA, you know, on the earnings, because again, those could be good. Look, you do whatever you want to do, but I would say just wait for the numbers to come out, and then maybe you can do something about it. And you know, look, you know yourselves better, so it's not for me to advise you on anything like where to buy or sell. But I'm saying just let's see if this falling kind of, or this bullish flag, you know, because again, it could end up being something of a bullish flag, especially looking at the weekly chart here. But still, we need some more. We need more flag. You know, that's kind of it. So we need more flags. So at the moment, we're just kind of having this. So we need a little bit more to the downside before, let's say, could see a beautiful bullish flag here. Okay, so anyway, so in terms of economic data, ladies and gentlemen, today, like I said, the market is closed. The U.S. market is closed. Tomorrow, we have the Fed Kashkari speaking. That's going to be quite an interesting moment here. Durable goods are coming out as well, so keep that in mind. House price index is coming out, so it's something. If you are trading U.S. related instruments like the U.S. dollar, in general, the majority of stuff is U.S. related, but U.S. dollar, yes, keep your eyes on that. CB consumer confidence. I mean, look, Tuesday could be somewhat of a volatile day, and be on the careful side if you are trading something like I said, U.S. related. So we could see those, you know, up and down moments, as I mentioned in the heading of my. Of this video, of this webinar. It's the tariff roller coaster ride at the moment. So that's where we're living through, and economic data is also kind of fueling that activity in the market. On Wednesday, we're getting the mortgage rate. By the way, this is an interesting one. So this is the NBA 30-year mortgage rate. So look, I think that this is quite important. So keep your eyes on that. If this continues somehow to rise, let's say, then I mean, it shouldn't, but if it somehow rises, then there could be an issue, you know, and on the consumer side, because again, it eats into the consumer's spending. So yeah, it could be a little bit of a difficult moment. So in terms of other economic data, we get the Dallas Fed Services Index on Wednesday. Thursday, continuing in initial and continuous jobless claims, together with the growth rate, GDP growth rate, the estimates, of course, but it's still, you know, it's going to be interesting to watch. Pending home sales, something to keep in mind as well. And of course, if you're trading oil, EIA crude oil stock change. Now going into Friday, now that's where the action will start, in my opinion, because we're getting we're getting some important economic data sets here. Honestly, like this is the core PCE index, the headline PCE index. Those are the numbers you need to keep an eye on, because that is where I think that the action could happen. And don't forget, we're getting the Fed's favorite inflation metric on Friday. We're getting the last trading day of the week and the month. You know, I sometimes call these like one-way traffic Fridays. And it's something that if you are a, let's say, a counter trend trading person, then you can get caught out in this one very quickly. So and you can, if you have been doing good, your account has been doing good for the whole month. Honestly, one Friday can, the last Friday of the week of the month can basically kind of screw you over really hard. So be just careful, very, very careful. So at the moment, the expectation for the core number, the year-on-year number, is 2 points. Wait, there's no expectation. Let me just find that number. Let's see what we can do. So I want to check out some other resources. Let's see if what do we have? Friday. So there we go. Okay. So the core PCE price index here, the year-on-year figure is expected to come out the same at 2.6. The month-on-month number is expected to increase a little bit. Now, the year-on-year, the headline year-on-year number is expected to drop a little bit. Okay, so look, I think, in my opinion, what's going to happen is that if the numbers come out on the lower side, now this is going to be fuel for another attack on Jerome Powell. I think that the administration will be attacking Jerome Powell, because again, they will say, look, the CPIs came down, the PCE came down. Hey, what are you doing with the rates, right? And at the moment, if we do dig into the CME Fed Watch tool, let me just put this one here. So, and we do, let's say, have a look at what they're planning to do by the end of this year. Well, first of all, June. They're not planning to go for any cuts or anything like that, just as it is. That has changed, to be honest, but okay. By the end of this year, they're expecting to see now 2 cuts. Now, before, if you remember, we had like 3, and a few times we had 4. But the 4 cuts were happening when the market was in turmoil in the beginning of April. Now we're kind of back to 2 cuts even. So it's going to be very interesting to see what's going to happen here, because look, I think this way, if you're watching this table here, we can understand probably that the Fed is afraid of inflation, because they think that inflation might actually pick up because of the tariffs, because of all these complex political stunts. And that's where, like I said, that's where the issue with the Fed is, because maybe they could go for a cut, but because there's so much instability, they at the moment they're thinking that maybe it could damage the supply here, the trade, and then supply, and then inflation could pick up. So they would need to actually, increase rates. So they don't want to do anything right now. However, again, there's always 2 sides of the debate, and somebody might say, but hey, so until on the contrary, maybe if the economy turns sour, maybe the rates, the dropping of the rates could be great. Maybe the lower rates could help out. But the thing is that I think that if the economy does go sour a little bit, that's when you need to jump in with the potential cuts, because then you can have like some sort of hype. Oh my God, the Fed is saving the world and everything like that. So that's why we're going for that cut, and the market kind of rebounds and blah blah blah. So the usual political thing, right? However, the moment, like I said, we're watching this show of the administration fighting the Fed. Who's going to win? At the moment, it seems like the Fed is winning, because, well, basically the market is on the Fed's side. That's the interesting bit. So yeah, we're gonna see how that plays out. DXY, by the way, continues to slide a little bit. However, we're seeing a little bit of a hold up near this 98.90 zone. Look, I talked about this last week. I said that look, I'm still leaning towards the downside, especially if we start falling below the 100 zone. There we go. We fell. Look, I'm going to be observing the price action here, because again, at the end of the week, we're, on Friday, we're getting the PCEs, which are, they come out on the lower side, we could see, DXY continuing its slide. However, maybe if they come out somehow on the higher side, now that's where it's going to be quite interesting, because maybe that could provide a little bit of, you know, support for the Fed actually, and could support, you know, the US dollar as well. So let's see. And let's jump into the German index, DAX. Okay, look, I mean, this is just, yeah, this is just, look at this gap here. Look at this. I mean, can I see? Yeah, there we go. There we go. Yeah. I mean, talk about, honestly, if you were short last week, I told you to keep an eye on this. And I said to you, like, look, this is an area that I'm watching here, and I'm very careful with this because maybe this is going to end up being somewhat of a head and shoulders pattern. But now at this point, it's actually difficult to say that it's a head and shoulders pattern because we have such a, you know, strong rebound. So maybe we need to get rid of this. Although even if it is a head and shoulders, or if not a head and shoulders, doesn't matter. Still, the breakout zone becomes this one. So this is a good area of support, as I can see myself here, and you can see yourselves here as well. But, you know, that's what we need to see here, break off. If we can get a drop below this, wonderful, you know, then great. On Friday, this is what we were seeing. This is what was happening. We were selling off rapidly. And then kind of, you know, it came back, everything came back and said that, oh, you know, we're not going to do the tariffs now, for now, at least until the 9th of July. And yep, and that's where we're seeing this rebound right now. However, are we going for an all-time high? Well, let's not rush into things. A push above the 24,150 zone could attract more buyers, of course, but let's, like I said, let's not rush into things. If I can get that breakout, wonderful. Yep, I'm going to consider some higher areas. Let's jump into the commodity world. The gold pushing nicely to the upside. There we go. Boom. So look, I talked about this. I said that we're in a falling channel. Yep, we are in the falling channel, and we are now approaching this, or at least trying to approach this 3,430 zone. This is what I'm going to aim for now. I will aim for this little area, and I think it's quite an important one. Look, am I saying that, you know, we cannot overcome it? Of course we can, but the only thing is let's not rush into things. For now, just if we continue to trade above the upper side of the falling channel, then yes, 3,430 zone is the one that I'm watching. Silver is pushing higher, and it did have a nice move here on Thursday, sorry. And look at this. I mean, we tested the 33.68 zone. I talked about this, and this is what I said to you last week as well. In the beginning of this week, the beginning of last week, I said that if we do clear the upper side here of this kind of falling channel here, then yes, we could go higher. In general, look, this is where theory works out nicely. The prevailing trend was to the upside. We got a little bit of slide here to the downside, and then we broke it higher. Great. Everything is according to the book. Fantastic. What's next? Next is this. Can we overcome this now? Because this was my target initially. Now the question becomes 33.68 zone. Can we clear that area? If we can clear that area, amazing. I'll go to the upside. Let's jump into US oil, which is WTI oil. Look, we had an attempt to clear on Wednesday that upper side of the triangle, but we kind of, you know, we failed to stay above it. We did clear it, but we failed to stay above it, so we drifted back down. However, we're holding above the 60.11 zone right there. If we can drop below this hurdle, below the 60.11, then great, wonderful. I will consider a move to the downside. But in general, I'm bearish still on oil. Don't get me wrong, I'm still bearish on oil. Okay, maybe I could have another, you know, spur here to the upside, a spurt to the upside, but yeah, it's we need a clearance of that 50-day EMA first. Very quickly on natural gas. Natural gas is stuck here around the 200-day EMA, so we're look, I need to see a push above all my EMAs in order to go higher. Very simple. Let's jump into coffee. Let's have a look at what's happening with coffee. Okay, drifting to the downside. Okay, this downside line no longer needed. But yes, we fell below the 100-day EMA, and we're still staying below it. So long story short, I'm going to continue targeting the downside towards, as long as we stay below the 100-day EMA. If we somehow push back above the 50-day EMA here, shown as the green line, then I will consider a move higher. Excuse me. But again, higher only with limited upside. Cocoa futures, right, drifting nicely to the downside. There we go. Look at this. Okay, it's a part of a nice little correction, but still I'm bullish because I'm going to remain bullish as long as we stay above the EMAs right there. If we can stay above those EMAs, wonderful, I'll consider a move back up. Let's jump into the Forex world, ladies and gentlemen. Beautiful AUDUSD. There we go. I was talking about this when I said to you, keep your eyes on this. I mean, if this is somewhat of a triangle pattern or something like that, then yeah, okay, great. We could see some action to the upside because, again, the prevailing trend was to the upside before entering this triangle pattern. So the greater chances for this one is to break out higher. However, what I said to you as well, that I'm going to get a little bit more comfortable with the upside if we do push and stay above the 0.6515 zone right there. Well, we did push, but we're struggling to stay. If we can stay, I'm going to lean a little bit more towards the upside. AUDNZD, just one of my favorite ones. So yes, we're keeping a close eye on the economic calendar, and especially on, where's that, Wednesday? On Wednesday, the interest rate decision, they're expecting to cut the rate. So if that's the case, we could see AUDNZD actually pushing back to the upside. So yes, this is another option to consider. Let's see if that's going to be the case, and because again, it could weaken the New Zealand dollar, but to be honest, my preference is to wait for a push above the 1.0921 zone right there. This would confirm a forthcoming higher high, potentially attracting more buyers into the game. AUDJPY, my risk on, risk off monitor. There we go. Of course. The situation with the tariffs kind of faded away a little bit, and there we go. We're seeing straight away the improvement in risk on, risk off, in the risk on environment. And yes, I mean, at the moment this is working out, but what I would like to say here is that I'm going to keep on pushing higher if we do see a push above the 93.85 zone right there. This is a break above the 100-day EMA as well. Yep, potentially opening the door towards that 200-day EMA. NZD-USD, by the way. So yes, we are at a very interesting spot right now. Yes, it seems like it wants to go higher, but let's not rush into things, as I said, because on Wednesday we get the interest rate decision. They're expecting to cut rates by 25 basis points. If that's the case, then this is not really very positive for the NZD-USD. However, in that case, the only positivity that could come is if DXY is still not feeling very well. Basically, if the US dollar is not feeling very well, and that's where this pair could continue drifting nicely to the upside. Let's jump into USDJPY. So yes, basically like almost a copy of DXY here. So far so good. No improvement in the US dollar, no improvement in this as well. Despite the fact that the market is improving itself, the equity market is improving, so everybody should be jumping off the yen, but nobody's doing that in a way at the moment. And I think that still the market is really still fearful a little bit, because again, it's a lot of uncertainty. USDCAD, there we go, boom, beautiful drop below this area. Look at this, one of my hurdles here, this 1.3750, we cleared it, and now the question is where next? Well, let's dig in basically. Let's have a look. Maybe this, actually, there we go, 1.3647, very nice target. Let's see if we can reach that one. That's the inside swing high of the 19th of September 2024. Good potential target. So let's see what's going to happen here. Let's jump into USDCHF. There we go. Good hold up here. Again, like I said, a copy of the DXY chart in a way. It seems like that. So if we do drop below the 0.8193 territory, I'll go a little bit lower. EURUSD, fantastic movement to the upside here so far. Like I said, so good until the US dollar continues to feel bad. Yes, I mean, then as long as it continues to feel bad, then yes, we could continue seeing this one pushing nicely to the upside. So yeah, for now, I cannot say anything else. I mean, this is working out great. I talked about it last week. I informed you about this, so we broke the downside line. Wonderful, brilliant. Let's jump into GBPUSD, ladies and gentlemen. So yes, hey, there we go. Beautiful breakout here. Beautiful breakout of this 1.3445 zone. Great, wonderful. So yes, at the moment, everything is kind of still pointing towards the upside. Look, we could be seeing a move here maybe towards the 1.3750, and then we'll go from there. So this is what I'm going to be targeting, the 1.3750 for now, and then we'll go from there. Let's jump into the crypto world, ladies and gentlemen, for dessert, as always. Bitcoin. Look, over the weekend, or actually last week, at the end of last week, we saw this nice, beautiful rally. We created a new all-time high on Thursday near the 112 zone, just a little bit above that, and then we dropped back down. We dropped back below the previous, well, previous all-time high. Basically, we dropped back below the highest point of January. And now we're kind of oscillating around that highest point of January. And the question is, are we going to stay at the end of the month? Because that's what I'm watching here. At the end of the week, let's see if we can, or yeah, actually on Saturday is the last day. Let's see if we can stay below this 110 zone. If we can stay below the 110, then wow, that's going to be maybe a bit of a signal here to the downside. And look at this. This little formation here is called a possible bearish 3 method. Now it consists of basically when you have a big candle here to the downside, and then consecutive 3 candles here, their bodies of their candles are within the formation here of this big pole candle, and then the 5th one kind of goes to the downside. Let's not forget that maybe also this is looking like a bearish flag here. So either way, a drop below this territory, this 106.80, 100 not point, but 106,800 zone, it would be needed. So a drop below this hurdle, yes, great, more sellers could join in. Bitcoin Cash pushing back up, or at least trying to do so. However, it did decline, yes, as you can see, after we managed to reach this 460 zone on Friday, and then we fell back below the 433. So in a way, that's kind of creating a little bit of an issue here and a little bit of a problem. So long story short, I would say just don't forget about the upside, of course, I mean, because that's what we're targeting right now, but also don't forget about the little correction back down towards this upside line. However, if we start clearing this 408 zone, I'm leaning yes towards the downside. Ethereum, this one's on the modest side, and I actually like it because it's providing me with a good area of resistance right here. That's a strong area of resistance near the 2,737 zone. By the way, I mean, let me just adjust this very quickly. Yes, there we go. Now I can see it a little bit better. So this is the barrier that I'm watching. If we can get a nice clearance of that one, a forthcoming higher high will be confirmed. For the downside, pretty straightforward. A drop below the 200-day EMA would be needed here in order to consider a larger correction back to the downside. XRP, so Ripple still remains above all my EMAs on the daily chart, so that's great. By the way, what the hell happened with my camera? You can see that I'm kind of frozen on the screen. I think my camera is jumping around here a little bit. Let me just check here very quickly. There we go. Now I'm back in action. I don't know for how long I was frozen like that, but anyway, apologies for that. Like I said, technical issues still remain. So yeah, coming back to the situation here on Ripple. Okay, look, again, the same story. The potential bearish 3, or maybe the possible bearish flag formation there. So if we can get a nice drop below my 50 and the 100-day EMA, then yes, I will consider a move lower from there. Litecoin, let's have a look. Back below the 100 zone. Okay, this is interesting. And look, I think that at this point we will stay somewhat positive. However, as long as we stay above all the EMAs. If we suddenly start falling below those EMAs, I'm considering a move to the downside. Dogecoin, again, similar story, dropped, yes, failed to reach this highest point of May, 0.2595. We can get a nice clearance of down, great. I'll go for some upside right there like this. But at the moment, this falling channel no longer is needed. But again, the same story. EMAs are doing a much better job. Polkadot, beautiful decline back below the EMAs here. So, however, still somewhat positive. Look at this. Yep, still above this upside line. Still doing okay-ish. So yeah, what can I say? For now, it's there is a chance for this one to go higher, but again, we need some confirmation. And if you're not really comfortable with this upside line, I would say I totally understand you. So maybe we can just wait for a better signal. Look, at the moment, I'm gonna just keep an eye on the Polkadot and not do anything. Now, this one's interesting. Tron is still holding above some of my key areas of resistance and support. So basically, I talked about this little area here, the 0.2667, and there was also a little lower number here, like here. Look at this. Basically, this whole area is doing a fantastic job. I mean, let's even highlight that for our future reference. I think that it does make sense. And for now, as long as we stay above this area, I'm going to continue targeting the upside. But of course, if you're not really comfortable with that, that's absolutely fine. We can find, we can find something else for you, because for example, we can find the barrier right here, the current highest point of May. If we can clear the 0.2822, I'll go for some higher levels. But if we somehow start falling below this highlighted zone and below the 50-day EMA, then yes, I will consider a bit of a retracement back down. So, ladies and gentlemen, that's it for this session. Let me know if you found it useful or not. Let me know in the comments. Thank you very much for watching and listening. I really appreciate your time, your views, your likes, your comments, everything. So, hey, as always, ladies and gentlemen, stay safe. Have your stop losses in place. Risk only which can afford to lose. Don't overtrade, and everything will be fine. And remember, this is the last week of May, so we could see this one being a little bit on the volatile side, especially Friday. So keep that in mind. Ladies and gentlemen, thank you very much, and I'll see you on Wednesday, 7 o'clock GMT time. Bye-bye.